What's up, everybody? Welcome back. Today we're going to be covering the GxT 4-hour profiling video, highly anticipated, so I appreciate y'all's patience. I think this video will be an eye-opener for many. We got a lot to cover, so let's get right into it. So first thing we must understand is the different types of swing points, right? So we're always confirming a reversal with a swing point. So let's get into those different types. So the first swing formation or reversal type is a C2 closure, right? This is the most common one, the easiest to identify. This is simply where you just wait for a C2 closure. A C2 closure is visibly shown by the failure to close below the previous candle's low, as you see. This signifies a reversal and that we can trade the next candle higher, right? So essentially, candle 2 is manipulation, candle 3 is distribution. Now this next one takes a little bit more experience, but it's something I used every single day across all time frames. It's essentially when candle 1 hits a key level, right? Or even candle 2 hits a key level. You have to hit a key level to even anticipate a reversal, right? So the difference between this candle here and this swing point here, so they're both candle 2s, right? This is a candle 2, this is also a candle 2, but what's the difference? It's the wick size. So if you've seen my candle profiling video, you would understand this, but essentially, since this candle does not support expansion, even if there's a key level here, we can't trade it as a candle 2. You want to wait for that because we want to trade expansion candles. So since this candle doesn't support expansion, given the large wick, the large displacement away from that opening price, you would simply wait for candle 3 to open to trade the expansion. This is a bit different where we're opening near that low, so we already know it's likely to get taken out. So when it does, right, and we create some sort of reversal confirmation, this wick is confirmed. Since it supports expansion, it can reverse into expansion. It's still a reversal candle, but it's also an expansion candle because of that small wick. So that's the difference there. Now this next one is simply where you don't have a candle 2 closure, you don't sweep at the previous candle's low, so you kind of wait for a candle 3 closure, right? So once you have a candle 3 closure, is essentially when you close above candle 2's body or high, right? Then you can trade candle 4. That would confirm the swing point. Shout out to T-Trades for all these swing formations, by the way. So this is specifically to the it's really specifically to the 4-hour for me, this here, also the daily as well, but it's really specific to the 4-hour, this swing formation here. So it's essentially this, it is this, right? But you're actually trading candle 3. So it's basically when the previous candle hits a key level and there's no reversal visibly shown on the time frame, this time frame that we're seeing here, but on the lower time frame there is. So pretend this is the 4-hour time frame, and within this wick here, we obviously trade into a key level, so we can anticipate a reversal. But it's not going to reverse within this candle because of the large opposing run. So you're still gonna wait for the new candle open, but there's a difference when we can anticipate this candle not taking this low. Like I said, it's when there is a reversal within this candle's wick or this candle's range, right? Whether that's a lower time frame swing point confirming it, or some type of CSD, whatever you use. I use swing points to confirm these lows. So essentially, if this candle's low is created from a swing point and this candle's opening up within it, then I can trade that away. So now let's go over key levels. I really only focus on 3 key levels, and mainly it's highs and lows and fair value gaps, right? So highs and lows are what you frame reversals from, and also retracements, right? So once you hit a higher low, we can form a retracement. Once you hit a higher low, we can form a reversal. Now, fair value gaps in order blocks or for continuations. So when price retraces into a fair value gap, we will continue away from it. Also, after reversal, we expect fair value gaps in order blocks to support price higher in expansion. So really, these are the only key levels that I really care about. So this is where I'm looking for swing formations to form from to trade away from. Now these are the models. So it's essentially like these are key levels, but they're essentially just reversal points and targets, right? That's what a model is, really. This is the universal framework we use on all time frames. So specifically, I'm using this every single day to confirm the high and low of the day. So we all know what internal to external range is. It's essentially when the market trades into a fair value gap. I'm not going to show you what a fair value gap is. There's a million videos on it. Price trades into a fair value gap and expands away, trading into the external range, right? We create a swing formation. So in this case, this is that candle 3 swing formation, right? Where, we can trade candle 3. Let's say this is a 4-hour chart. Maybe candle 2 hits a key level. Doesn't have that reversal, but maybe within it we do, right? Or maybe when price starts to expand away, it confirms a reversal, right? Maybe by a CST or something. Then we can trust to trade away from this low here. As long as the candle that we're trading within supports expansion, that's really all that matters. So here, maybe you do wait for this swing formation. Well, now you have a valid candle 3 closure because it closes above candle 2's high. So now you can trade candle 4 into this, external range high, right? Marking out EQ of that previous candle's range, which we'll talk about a little bit in a minute or later on. We expect candle 4 expansion into this high, right? This would form the low of day, for example, right? So in this case, right, we have price trading into external range liquidity, right? This can be any time frame. This can be the daily time frame. Let's say the previous day trades at the high, right? Closes a candle 2. This would simply be candle 2, the previous day manipulation, this next day distribution into internal range. So the previous day manipulation of external range, the next day distribution into internal range, right? This can also be the 4-hour chart too, right? This can be Asia session, right? Manipulation, London session, back into the daily range. Maybe Asia made a fair value gap or something like that, right? This is one of my favorite models to trade on all time frames, and it would be the order pairing ranges, or just a manipulation of a higher low in distribution into the opposing side of the range. It's favorable when the opposing side of the range is failure swings like this. So essentially this is when, let's say candle 1 trades into the low, right? We can already anticipate a potential reversal. So if we're going to reverse, since this candle didn't do it, we would ideally want to reverse off this candle's low. So this is how you can anticipate a candle 2 reversal into expansion, right? So here is a valid swing formation, candle 3 closure confirms a swing. Here is a valid swing formation where candle 2 confirms a swing, and this is a valid candle 2 reversal into expansion given the wick size. So you see how large this wick is? You can't trade it, right? You can only trade this one because of the wick size, right? You can also trade, obviously, this candle 3 because the draw and liquidity is still open. So this is the framework I'm using to frame the high and low of the day every single day, right? So what is the goal of GxT? It's essentially to align expansion candles in one direction. So just like I showed you here, from these key levels, I'm trying to align multiple expansion candles away from that key level, away from the low of the day. So the low of the day is going to be put in from some sort of key level, right? Then I'm basically waiting once I hit that key level. I'm basically waiting to see if the current 4-hour candle supports expansion away from that key level. If it doesn't, I'm essentially going to wait for the next 4-hour candle to open up, to realign itself with expansion. Then I can trade the expansion away. Within that 4-hour candle, I'm trading 1 hour and 30 minute swing formations, right? So all I'm doing is just aligning expansion candles, like I said, right? So that's what this would look like, right? We hit a key level, for example, we expand away, right? Let's say this is New York session. I can't trade this, right? Why? Because the current 4-hour candle that we're in does not support expansion higher. So what do I wait for? The new 4-hour candle to open, right? The daily supports expansion at this point, but the 4-hour candle does not. So I'm waiting for candles to realign bullish. So essentially all this 4-hour candle was responsible for was retracing. So as you see, this is an example of this candle here is not a C2 closure, but within it, what did it do? This is why it's important to understand that we don't actually need a C2 closure, for example, because within that candle, we have a C2 closure and a key level being hit. So we expect, this expansion to occur when that new 4-hour candle opens up, right? So here, you can actually trade this. You can anticipate this low should not be taken, right? Because of that lower time frame reversal within that candle, that previous candle. So then you would just trade this next 4-hour candle higher, right? And if you wanted to wait for extra confirmation, now you have a candle 3 closure, closing above this candle's high, then you could, trade this candle as well, right? Because at this point, this is already supporting expansion. So now we're going to get into profiling the 4-hour chart. So with Forex traders, you're essentially going to be focused on the 1 a.m., the 5 a.m., the 9 a.m. candle. 1 a.m. represents the London session. 2 to 5 a.m. are what we're going to focus on because that is the kill zone. 5 a.m. represents the New York session, so New York continuation / reversal. We're focused on the hours of 7 a.m. to 9 a.m. because that is the kill zone. And then as well as the 9 a.m. continuation the 9 a.m. New York continuation / reversal. You're going to be focused on 9 a.m. really to around 11. You can cut off at p.m. or 12 p.m., but for Forex, probably want to stop by 11. I would say, right? So these little if-then statements, right? The ones we really care about are the ones down here. If 1 a.m. manipulates, then 5 a.m. should continue. If 5 a.m. manipulates, then 9 a.m. should continue. If 9 a.m. manipulates, then p.m. should continue, right? Essentially, if the 4-hour candle does not support expansion, the current 4-hour candle that you're trading, right, does not support expansion, even if it's a key level, you're going to wait for the next 4-hour candle to open, right? That is a filter for price. Waiting for candles to align and aligning expansion candles in one direction. So basically this is a filter for price, right? It allows you to time high probable entries because you are trading within expansion candles, multiple expansion candles. That's why this model is very good, right? So futures traders, this is what I trade. London session is going to represent the 2 a.m. candle, right? 2 to 5 a.m. New York, 6 a.m. New York session. So basically the AM session is going to be between, the 6 a.m. New York continuation / reversal will be 8 a.m. to 10 a.m. I don't care about the hours of 6 a.m. and 7 a.m. They're not relevant, especially on indices. And the 10 a.m. candle, continuation versus reversal, we're going to be focusing on the hours of 10 a.m. to 12 p.m., right? I don't really care about 12 p.m., 1300. I don't care about that, right? So really, you're only focused on 2 hours. You're only focused on the last half of the 6 a.m. candle and the first half of the 10 a.m. candle, right? So really, it's you're really trading for like 4 hours a day, you know? That's really all you're trading. So the if-then statements, right? If 2 a.m. manipulates, then 6 a.m. should continue. If 6 a.m. manipulates, then 10 a.m. should continue. If 10 a.m. manipulates, then 1400 should continue. And again, same rule here. You want to wait for expansion candles to align. Now let's go ahead and move on. So with the London reversal, again, whatever you're going to frame the high and lows of day from, key levels, right? So 1 hour and 4 hour key levels or above should form the high and low of the day, right? I'm not going to use a 15-minute key level, 30-minute key level. Ideally, it's 1 hour and above, right? So here we have internal to external. So the daily is opening low first, right? As you see, the London session does engage with this key level, and you can trade it. Why can you trade it? Because the small wick. The small wick supports expansion, so reversal into expansion. Here is an example of order pairing ranges. So the day opens low. You see that Asia session hits this low but does not reverse. So we want to reverse off that previous candle's low. And we do, right? We have that small wick, so we can simply trade it, right? As well over here, this will be external to internal. So maybe the previous day expanded, right? And then we open low into the previous day's low, right? That's your external range. Since we expanded the previous day, that creates a gap from the previous day that we can then target for external to internal range, right? We can also trade this, right? Because it supports expansion. But if it didn't support expansion, we would wait for this 6 a.m. candle to trade back into the range, right? So here's an example of maybe the previous day expanded, created a order block within the previous candle's range, right? The day opens low into it, right? Asia session hits the lows, we reverse off the Asia lows, right? We can trade it because it supports expansion. So any reversal profile that you're trading will essentially just take out the previous candle's low, right? So this is a London reversal. It has to take out the previous candle's low on that 4-hour time frame because it's a reversal candle. Does that make sense? So it's basically going to be a reversal into expansion candle. So here's a New York continuation. This is 6 a.m. continuation. So this is basically when Asia or London puts a low of the day in. So in this case, this is Asia session, or sorry, London session puts a low of the day in here. So if it puts in a low of the day, what can we expect? We can trade this next candle higher, right? We already have the C2 closure or some lower time frame confirmation. So all you got to do is confirm the low of this wick. How are you going to confirm the low of this wick? With the 1 hour and 30-minute swing point. Right? We confirm the high and low of the day with 4 hour swing points. We confirm the low and high of 4 hour candles with 1 hour and 30-minute swing points, which we're not going to go over today. We can go over that in a part 2, right? So in this case, here's your order pairing ranges example. Here's your external to internal range example. Here's your order block example, right? So again, just because this candle is not a reversal candle doesn't mean it can't reverse, right? There could be a lower time frame reversal, right? So maybe within this candle, there's a 1 hour swing point, etc., right? Or maybe a 30-minute CST, 15-minute CST, whatever you require, right? But you're not going to trade this here away from this key level. Why? Because it does not support expansion. So you're going to wait for this 6 a.m. to continue away from that 2 a.m. low. So now this is 10 a.m. continuation. So 10 a.m. continuation is when either 2 a.m. sets a low of day or 6 a.m. sets a low of day. Doesn't matter. So here's an example of 6 a.m. setting a low of day, hitting internal range, right? And then 10 a.m. continues towards Asia session highs. Here's order pairing ranges where 6 a.m. puts a low of day in. Here's external to internal. And here's 2 a.m. putting a low of day in, right? As long as there is a draw liquidity open for 10 a.m., you can trade continuation. But let's say we expand prior, like we expand a very large range prior to 10 a.m., you don't really want to look for a 10 a.m. continuation, especially if the draw liquidity is already taken. So that's a little tip for you. So the 6 a.m. 4-hour reversal, this is the ideal New York reversal, right? So within the 6 a.m. candle, you want to be trading and pairing your framework with drivers. So the 8:30 driver and the 9:30 driver. This is why it is preferred to have a 6 a.m. reversal to form the high and low day in a New York reversal, because you're essentially pairing that with the driver, because the drivers reside within that 6 a.m. 4-hour time window. So it's very ideal that is it a 6 a.m. reversal. So your best trades are probably going to be 6 a.m. manipulation, 10 a.m. continuation. If you just waited for that, if you just traded the 10 a.m. candle, you will do great. You'll do fine, okay? There's plenty of opportunities within that one 4-hour candle, literally the first hour of that 4-hour candle, the first 2 hours. So yeah, that's another tip there. So here's an example of, right, previous sessions hit a key level, right, where Asia, London hits this key level but doesn't reverse. So we got to roll that over to the next session. If London's not going to reverse, then we got to have, ideally, New York to reverse. I couldn't talk, sorry. And ideally the drivers to reverse, right? If you haven't seen my driver video, go and watch it. One of the most consistent things you're going to see. It's very good. And yeah. So here's an example of order pairing ranges, right? Where previous session consolidate. Well, we want 6 a.m. to go and manipulate, right? As long as it has that small wick, we can trade it, right? If it doesn't have that small wick, can't trade it. Then you'd be trading the 10 a.m. continuation, right? So here's an example of external to internal in just an order block continuations, basically, right? So here is the 10 a.m. reversal, which is not my favorite. There's some nuances to the 10 a.m. reversal, which we'll get into. I don't know if I have some examples of that, but a lot of times you can trade the 10 a.m. counter. So what that really is let's say we expand very large, overnight or just the AM session or whatever, and then 10 a.m. opens. So basically the daily range is already capped off. It's already, expanded. You can trade the 10 a.m. back to the range. This is a bit different where it actually forms a low day and is actually creating the bulk of that daily candle. So this is a bit different. This is specific, okay, when the driver trades into a key level. So for example, like you open up the 6 a.m. candle and we haven't hit a key level yet, really. So when the drivers expand into a key level, right, but they don't reverse, the reason why they won't reverse, for example, is because maybe the opening price is really far away or whatnot. Or maybe they just Maybe they just hit that key level like late into the end of that 6 a.m. candle or something like that, right? This is when you can actually anticipate a 10 a.m. reversal to be like more high probable. The reason why you don't want a 10 a.m. reversal majority of the time is because when those drivers fail to reverse, it's not really that's not a good sign if they don't fail to reverse. Like you want the 6 a.m. candle to reverse. So that's why I say that. And I have an example of this actually. Yeah, I do actually, so that's good. So again, I'm not going to go over this. We've already seen this, right? So now let's go into the GxT ideal profile. This is where the low of the day, the daily wick, is formed from SMT manipulation, right? So basically, the low of day is created from a protected swing, creating the wick. So what do we do after manipulation, or once a protected swing is created? We expand, right? That expansion creates the body of the candle, right? So now you're just aligning 4-hour expansion candles away from the low of the day, right? So basically, this 2 a.m. candle here forms the low of the day, right? You're not going to trade this candle. Why? Because it does not support expansion. Pretty large wick. You're just going to simply wait to align yourself with expansion. Does that make sense? So that is the GxT ideal swing or profile. So now let's get into putting it all together here. So this is an expansion candle, right? Continuation, right? You're just working off the previous candle's range. So you're going to mark out the EQ of that previous candle's range if you're going to continue, right? Within that previous candle's range, there can be a gap left within the previous day's range to actually form the low from, right? So this is where the day opens low into that gap that is or resides within that previous day's range, right? Then we're just trading a 4-hour profile. So really all we're trading is 4-hour expansion candles away from this key level. That's really it, right? Which if this wick supports expansion, right, we can trade it, right? So this is internal to external, trading 4-hour expansion candles away from it. Now this is a C2 expansion candle, right? So this is the daily reversal into expansion candle, right? So let's say the previous day expanded into a key level, so we can already anticipate reversal. So if this candle traded into a key level but didn't reverse, well, we want to manipulate that previous candle's low to reverse from, ideally, right? So this is an example of us reversing off of that external range low, which is the previous low. And, that's just external to internal, right? We're just trading 4-hour expansion candles away from that, right? So here is premium discount of that previous candle's range, right? We can target around EQ or the previous, day's high, which is some sort of external range high, or simply just a fair value gap that resides in that previous candle's range. So here's an example of what I mentioned earlier, of you actually fading a daily candle. So the only way you can do this, guys, is if the previous day expanded a lot, like overnight, or like I said, before 10 a.m. or something like that, where it hits a key level, right? Like a daily key level. So you can already anticipate some sort of reversal candle, forming there, or some sort of reaction. That's the only way you can trade this reversal candle, right? The only way you should be trading it. So essentially what you're going to be fading the daily candle, but you're going to be trading a 4-hour expansion candle back into the daily range. So you are fading the daily candle, but we already know that we can fade a daily candle, right? But we know that price cannot expand past this open. So our targets, we need to adjust our targets. We can't be targeting key level or objectives way beyond the daily open, way up here. It's not going to work. It's not going to work ever because of the large wick. Right? We know that price can close. We don't know where it's going to close, but we know it's going to close somewhere. Wherever, right? So if this is going to form the low day, we know it's going to form. The day is going to close back within this range somewhere in here, right? We can target either maybe some relevant high or something back within the daily range, maybe external range liquidity or internal. Sorry. This is an example of external to internal. So either the external, key level is way to the left, or maybe it's created within the same day. So maybe this is Asia expansion, London low, New York manipulation of London low, right? 10 a.m. opens up, right? We already have a reversal within the previous 4-hour candle because it hit a key level, which is an hourly low here. And then we can trade that 10 a.m. candle back within the daily range, right? This is an example of the previous day is a reversal candle, so we're expecting this next day to expand within that previous day's range, we have a relevant low. So when manipulated, right, this creates a protected swing, which, confirms this low of the day, which is the GxT ideal profile, right? Like I said, the ideal scenario when manipulating is, opposing failure swings on the other side of that range to targets. That's always ideal. Now we're just confirming the low with a swing formation, right? And ideally SMT. So this is trading another C2 candle. This is for the Forex traders, right? This is order pairing ranges. So we manipulate the previous day's high. Back within that previous day, we have a bunch of failure swings to target, right? So just going from range high to range low. Now we're just trading 4-hour expansion candles away from that. So we wouldn't be trading this 1 a.m. candle. So this is technically a London reversal. We'd be waiting for that New York continuation because this doesn't support expansion. You just don't know where it's going to close, right? It could close here. You don't know. So you don't wait for this candle to expand. And it's also not going to travel very far past the open because of the candle profile. So that's all I have for here. Now let's get into these examples here. So here, what do we have? Let's go to the daily time frame. So with this previous week, here we have an expansion, as you see. So we can definitely expect a new phase of price. So a lot of times you can be very one-sided on a Monday. This idea that you can't trade Monday, not true. Especially when the previous week actually hits a key level or expands, right? Here's the reason why. So here's the logic. If we're going to revert, if there's going to be a reversal week, when are we going to reverse? Early on in the week, typically, right? Off of this candle's high, more than likely. We're going to reverse early on in the week. So it makes sense that you can trade Monday back to the range, right? If you're going to have some sort of profile, like daily profile that supports the idea. But also, if we're going to continue from this range here, when would we open low first? Or how, if we're going to continue, how are we going to continue typically, right? We're going to open low first and go higher. That's how a bullish candle forms typically, right? So when are we going to open low? Early on in the week. So you're one-sided bearish, right? Going into the week. When are you likely to, consolidate, right? After expansion? When the candle opens, right? So either way, it's like even if it's going to consolidate or retrace, blah, 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 you can't be bullish this day, right? Because you would expect a new phase of price typically, right? It's just like this week here. It's like if we're going to continue, like if we're going to reverse this week, for example, and if we're going to continue off this candle's range, like you're going to see the low of these candles are probably made really early on in the week. This is Wednesday. This is Tuesday. So typically like Monday through Wednesday is you're going to reverse, right? You're likely going to reverse or retrace early on in the week. So that's what we have here, right? Where it just makes sense because here, the daily is opening high first and we're leaving a gap, right? So in this case, you don't want to trade Asia session. So you would trade what? London session, a manipulation of this high. So as you see, what forms the high of this 2M candle, is a CSD on the 1-hour time frame, but also a swing formation on the 2 a.m. candle, right? So this forms the high of the 2 a.m. candle. Now you have to ask yourself, we hit a key level to form the high of day, a 1-hour and above key level. We have a drawn liquidity. The candle profile supports it. It's opening high first. The logic makes sense to retrace back in this range or whatnot to fill this gap. So now you're asking yourself, does the current 4-hour candle support bearishness or expansion? So obviously it does, right? As you see that small wick. So then you can trade these expansion candles to this low. It's as simple as that, right? So this would be your target essentially, or the gap fill, whatever you want, right? Now with this previous day's close, this looks very good to continue from, right? What do we have? A bunch of fair swings. You have a gap here, so this could just be price returning into a gap. This can be a hard set from drawn liquidity. So what are we going to do? We're going to look for a key level back within this previous candle's range, right? So whatever key level is, by the daily open, that's really what we care about. This could form the potential high and low today. So do we have a key level? Sometimes you don't. So in this case, you do, right? Look within the previous candle's range. We we have a 4-hour gap, and even better, right? We open high first into that gap, right? And we create SMT with the range high. So this is a very strong signature in price, essentially where price creates a fair swing. That fair swing is created from a gap and SMT with range high. This is a very high probable signature, especially with the candle profile supporting it, right? And look at all these fair swings, like very one-sided, right? So look at the high of the day. It's formed from a 6 a.m. New York reversal and a 10 a.m. continuation. But we can actually trade this reversal, as you see, right? Why? Because it hits a key level. It's the candle that actually creates the SMT, but also, let me delete this. But also it supports expansion. So see how we can trade candle twos? We don't have to wait for the close necessarily. So if you look here, what forms the high of that? A 1 hour swing, right? What do we have? A CSD in the hourly time frame. It's up to you, like what you want to require. I don't require an hourly CSD, but it's there in this case. But 9:30, as you see. So if this is gonna be a high day or this is gonna be a bearish day, then what do we want the driver to do? We want it to reverse. So here's 9:30, the driver. As you see, it creates SMT with NQ here and puts in a reversal. So if 9:30 reversed, what should 10 a.m. do? Or the 6 a.m. candle also reverse? 9:30 as well. 10 a.m. should just continue lower. So this is when you can trade, whatever you trade, right? So here's continuation order blocks. Maybe you trade just the 30-minute opposing candle here. That's fine too, right? Many ways to trade. I'm going to show you guys, multiple different ways to trade this, but yeah, this would be this, right? You have the 10 a.m. opening here. So once it closes above these opposing candles, now you can assume that the high, the 10 a.m. candle is protected by these opposing candles, essentially. Put your stop loss here, and you let it ride, right, into your overall draw on liquidity, especially just the previous low here. So that's an example there. Hopefully that makes sense. Now let's move on. So with this is a interesting example. I don't want to show you guys the most, like perfect examples or whatever. And I had a example of a Asia reversal. So this is kind of scuffed here, guys. I don't know why I didn't show this. Kind of annoying. This is supposed to be in here, but it's not. So obviously I showed you guys a London reversal. But what about an Asia reversal? This doesn't necessarily have to be formed from a swing point, right? And this is just essentially when the day opens up and just starts expanding, right? So the way you're going to trade this is you're just going to be either two things. You're either going to be trading continuation from the previous 4-hour range. So you're wanting the previous 4-hour, upper half to respect, right, this range, so to support expansion. So that small wick. You're basically just trading a 4-hour expansion candle away from the low day, right? Just like I have mentioned, right? Or above the daily open, right? So here's the daily open. Above it, there's going to be some form of swing formation that forms, right? So basically price expands, retraces, puts in swing formation. This swing formation confirms reversal. So basically expansion, retracement, the C2 kind of caps off the retracement, and the next candle expands. Does that make sense? So I wanted to add this in there because it's very important, because a lot of times Asia session can be high and low of the day. So it's really good to know. And that's what you see here. So with this weekly profile, as you see, this is Monday's open here, and Monday expands higher, and we inside bar within Monday's range throughout the whole week, really. So what is this? This is a consolidation profile. At this point, the weekly candle is more so supporting a bullish week because of the small wick on the lows, right? So price expanded pretty far away from the weekly open. So I'd be favoring this as a manipulation to really return back in this range, but we know it can't really expand really far away because you're going to see that this is a bank holiday, so it's capturing Thursday and Friday in one range, but this is not the day you're going to look at here. It's not a bearish candle whatsoever. So here's the opening price. So essentially the previous day, the bank holiday trades into low. We just instantly open up and expand away. That's what I mean by this. Price just opens up and expands away. So when you see this kind of happen, in this specific scenario, it's like you know that price is not likely to get all the way up here. One, because that daily range is going to be huge. For one, like this daily range is already massive at this point. But also the weekly candle profile doesn't really support that. So when price returns back into this range and we have an internal manipulation, this can form the high of day, right? So this is an example of 6 a.m. forming the high of day, right? And there's no candle 2 closure as you see. But when you look within this candle, what do we have? A reversal. So we have 9 a.m. So we're pairing a driver, we're pairing a manipulation with the driver. So 9:30 reverses price. That's pretty significant. So 10 a.m. opens up within that reversal, within the previous candle's range. So as you see, like this candle does not reverse. Why? Because it doesn't support expansion. When does it actually reverse? When the new candle opens, right? Pretty random, right? What about this here as well? So here you have a nice V-shaped signature, right? You trade into low and then expand away like this. So you see how we have a C2 candle above the daily open? So this can be a area to reaccumulate, to continue, away from that low of the day, right? From this gap really, and get to some sort of drawn liquidity, which is this little range high. Does that make sense? So that's an example of this actually. Here, example of this, a C2 closure above the daily open. Okay. So that's an example there. Also had this example here. These are just days where they have like interesting profiles. So I want to show you guys. So here you see Asia session just expands, creates the whole daily range, right? This is when you can expect the next sessions to retrace, because we cannot expand forever. That's one thing we really can't do, right? What do we also trade into? This daily swing low, right? So we can expect some new phase of price. You can't expand forever. So this is when London or New York can retrace back in this range. But we also can't. The other thing we can't do is expand past this daily open. Why? Because look how far price traded away from this opening price. So see this is an expansion candle, right? So you would expect this to be some sort of retracement, and that retracement to be capped off at some point. So you know that price is going to close below this opening price, right? So when this 10 a.m. candle here trades into this opposing candle, or just premium of the range, you can just trade this candle, back lower essentially. So this is like a PM trade, so like 1400. See how the logic is the same. It doesn't really matter, but what kind of thing you're trading. It doesn't really matter what time you trade. Blah blah blah. It does not matter. I remember I traded this as well. It's kind of random, but here's a manipulation here. What forms the low of day? It is 2 a.m. You have an SMT here. I do believe. Let me just double check that. I don't remember. Okay, you do. I don't know how I remember that. But yeah, you have an SMT here. I guess it's on ES, right? What? Where's my drawing go? Weird. I don't know where my drawings went, but here you have an SMT here, right? And I remember I traded this high, right? Here's the candle profile, right? It opens low first, right? Just trading back in this range. But anyways, let's move on to another example. All right. So with this, what did the previous week do? Expanded, right? So if this is going to be another expansion week, do we have a key level that is from the previous week's range, or are we, do we have a key level around the weekly open? Why do we want key levels from or around the opening price of the candle that we're trading? It's because we want closer proximity key levels, so they support expansion. So the candle low can trade into it and have that small wick. If it's a key level that's really far away, then obviously that would create a large wick, right? Because price would have to travel very far, which doesn't support expansion. So we don't want to trade that, right? So in this case, you have Monday opening high first, which is not really ideal. Like this can support some retracement lower because opening high first, right? And then we have price leaving these kind of like these fair swings, right? And then price trades into low, creates gap SMT. So if I show you these assets, none of these other assets trade into a gap, as you see. So you have SMT with a gap there. Why are my drawings disappearing? What the hell, man? Why are my drawings disappear? Okay, that's weird. It's over here. So here you have that SMT, right, with that previous candle's low within a gap. So you can already anticipate what a reversal into expansion candle on the daily time frame because the previous day hit a key level, right? And now you have SMT confirming that low. That's great, right? So I go to the 4-hour time frame here. What do we have? 6 a.m. manipulation. What can you expect 10 a.m. to do? Expand, right? There's also a strength switch. Why is strength switch? Notice how this is the candle that manipulated, right? That is in discount of a range. Look where NQ and or ES and YM are, right? They're in premium of a range. And look at this close here, guys. Look at the close. Look at the wick size. So it's showing, strength, basically. Look at ES here, the 6 a.m. close. It's closing with a large body, right? Over here is with a large body as well. You have an SMT right here. So that is obviously a strength switch, right? Boom, there's your 2-stage SMT. So you can trade this high, right? If I go to the 1-hour time frame, here is your 2-stage SMT right here, right? It happened even sooner, actually. So here, you manipulate prior to 9:30. So what does the 9 o'clock candle do, which has 9:30 in it? It expands away, right? So again, there's just drivers, right? Very consistent. We already know this. We also have a V-shaped signature. That is a sign of reversal. You guys should know that. What do you have on the opposing side of that? Consolidation. So when 10 a.m. opens here, right, it has that intra-candle CSD, which is a T-trade concept. But basically, price expands away from the 10 a.m. open, right, forms a order block. Now I can assume that the 10 a.m. low is put in because it's protected by an order block, right? We should expect order blocks to support price higher, right, into our draw liquidity, and we can target 2R to our draw there. Hopefully that one makes sense. It is a 6 a.m. reversal, 10 a.m. continuation, right? And we're not going to trade this 6 a.m. candle. We're going to wait for the 10 a.m. candle ideally. Now, one way you can trade a reversal candle is under a couple of conditions. It's when the profile supports it ideally, right? So in this case, does it really support it? Kinda, not really. It's kind of a weird profile where it kind of opens high first and opens low. That's not ideal, right? You also need higher time frame, right? So the higher time frame definitely supports it, for sure. Higher time frame supports it. But the most important part really is you need to be trading away from the low of the day, right? The 6 a.m. candle or the candle that you're trying to fade has to be, and it's always going to be the 6 a.m. candle. Actually, it's always going to be 6 a.m. candle. I'll show you no reason in a minute, but you want the 6 a.m. candle to form the high and low of the day, right? And you want it to be manipulation. So you want to be trading manipulation, away from manipulation, because this is where it's likely to form that reversal candle, and just close high within its range or whatnot. And there also needs to be SMT. Why do you need SMT? So you can know it's an actual reversal. That way it actually forms the reversal candle. But here's how you position yourself within this candle. Another thing, you have to have a driver, by the way. So the 6 a.m. candle, why do we trade the 6 a.m. candle? Because that's what the majority of the drivers are within. So the reason why you can trade a reversal candle, within a driver is because we have the extra volatility to also expand within that same candle, right? So that's kind of the logic there, right? When fading candles. And, with 9:30 also just expanding away from this reversal, you have extra confirmation. But here's how you actually position yourself. You're going to take the opening price of that candle to the low of the candle that you assume to be the reversal. And ideally, you want to enter in the lower half of this candle's range, right? Why? Because you don't know where this candle's going to close, right? You don't want to be entering super high in a reversal candle just to have the next candle, take you out or whatever. Or just to have, you think that this candle is going to close way up here, but it ends up closing down here and takes you out. You want to be positioned as low in that reversal candle as possible when it's a bearish candle, and vice versa. Right, so your stop loss needs to be positioned in the lower half, at least, right? So that's how you want to approach it there if you wanted to trade or fade a 4-hour candle. So yeah, it's going to be 6 a.m. drivers, SMT. That's how you position yourself, essentially. So moving on, here on the daily chart, what do we have? The previous week, we're just in a gap really. As you see, we're just in a gap. Previous week, we have this swing formation that forms, right? And we kind of expand away from that. And this kind of retraces, and we have an SMT here. If I go to Ethereum, I had to throw crypto in here for you weirdos, for real. But here you see that none of these days take out the previous candle's low, obviously, and this candle does. So when this day expands away, that confirms the swing point. So now I can expect Thursday to expand with that information, right? We also leave these equal highs to target behind, and we retrace into this gap, right? So looking back within the previous candle's range, can we continue away from that? Do we have a key level within it to continue away from on the 1 hour or 4 hour time frame? So here you have a 4 hour key level. The daily opens low into it. We put in a reversal here, and then we can expect expansion the next candle, right? So when I go to the 15-minute time frame, for example, right, whatever you choose to trade, many of you guys know the GxT alignment and whatnot. Here's the 15-minute. That works perfect, right? You have that V-shaped reversal that confirms. That's what you want to see within a C2 candle. You want to see these reversal signatures. You want to see SMT, etc. So here you have that V-shaped reversal, that CSD, and then you're just trading the continuation order blocks with, while aligning expansion, right? So the daily supports expansion, the 4 hour supports expansion, the 1 hour candle support expansion, right? So now you see what you're doing here, right? You're aligning, multiple time frame expansion candles in the same direction. So now let's move on. So here we are in silver. This is a trade that I took on gold though, but we're gonna go over silver here. So with this weekly profile, as you see, or actually I can show you a little bit better here. Here's the opening price of that weekly candle. So we open high for, kind of like open low, leave equal lows, and then we open high, leaving equal highs. So what is this consolidation week, right? So when we manipulate that low, just like that second example I showed you guys, or the first few example, where we had that consolidation profile, we can return back within that range, right? Especially if the current 4 hour or the current daily candle supports that idea, right? So here you have SMT with that low, so that obviously supports the idea for sure. But here's this day opening low first. You see that? So this wick is quite large wick. So what can we target? Either the daily open or just above it, because we know it's not going to really expand much past the opening price. So this fair value gap, what can this be? External to internal. So we have a 1 hour or 4 hour key level or above, right? Confirming the low of day. So here is a daily key level, SMT. What do we have here? A swing point confirming the low of the day. But as you see, Asia session hit this low but did not reverse. So we expect London session to put in the reversal, right? We can trade this candle too as well. Why? Because it supports expansion. See that small wick? We can trade that. Or if you want to add, if you come into New York session, I traded this in New York session. So I actually traded the 6 a.m. candle, right? Higher into this high, and obviously 10 a.m. I just held it into this high, right? So if you go to the 15-minute time frame, for example, you can trade that 2 a.m. reversal because we have that 15-minute CSD, whatever you require, right? Maybe you require a 30-minute CSD, whatever you require. So here you have that V-shaped signature, that is your reversal signature. So you can enter on the second, second CSD, whatever, fair value, guys, blah, blah. It doesn't really matter what you enter on, it all works out because you're aligning expansion candles, right? The candle profile you're trading supports expansion, though it makes sense on the weekly time frame for that, consolidation profile. This is a relevant low on the higher time frame. There's SMT there. The list goes on, right? It's very high probable, this trade. You're also trading back to the weekly open, blah, blah, blah. So that's an example of a GxT London reversal. Now let's get into the next example here. So here on this higher time frame, or this weekly profile, price just opens up right into the previous low on Monday. You see we close back within the previous range and then we expand back into the range into this relevant high. So this is where we can definitely anticipate some sort of reaction, whether it's reversal, retracement, to trade back within this range, And at this point, it's kind of pretty interesting, right? Because we have Monday, or the week basically supporting expansion. If I show you here, to small wick here, that supports expansion. So if we're going to continue away from this low, right, this key level, right, above the weekly open should support price higher, essentially. So basically what this is Monday, Tuesday expansion, Wednesday retracement, and a reversal off of Wednesday's low to expand again. So expansion, retracement, expansion. That's all that is, right? So, but this previous low is also a fair value gap. Okay, so there's a logic for these 2 days. Now let's go into see what actually forms the high and low today. So as you see here, how can we anticipate, or how do we even know that this could be a retracement lower? It's not just because we take out external range. That's not the reason. The reason is because the candle profile. You see how it opens high first? That can signify that this idea can be valid, right? And then we obviously print a reversal signature here because we have that C2 candle at a relevant time, which is London. So this is when we can anticipate 6 a.m. and 10 a.m. to continue, to target, EQ the range. So basically it's New York or London reversal, New York continuation, right? And that was this day, that's what it did. It just rebalanced EQ, right? So now you're just waiting for the previous day. What is it going to do? Is it going to respect this range to continue lower, or is it actually going to reverse off of this low? And it's just like that logic where I told you that, where I told you guys that Monday can be one-sided. This is the same kind of logic where the previous day it expanded into a key level. So it's like, when would we reverse if the previous day hit a key level but it didn't really reverse? We would reverse early on in the day. Why is that? And we would ideally reverse early on in the day from the previous day's low, right? Same logic as I told you guys earlier. It's actually just like this logic on the higher time frame. If we're going to reverse off this previous week's low, we're going to do it early on the week because we're opening near it. You know what I'm saying? So the day is opening near the key level, which is the daily fair value gap or the previous low. So therefore, it would reverse in Asia or London. That's when it would do, right? So when Asia actually expands away and gives this reversal characteristic of that V-shaped signature, right? See that we take out this low and expand away. Well, then fuck. I mean, that's the low of the day, probably, right? And it's that same logic here. Notice how we're factorizing things, right? What do we have here? A C2 closure above the daily open, right? So this is gonna be low of day. Then, this gap that forms, above the daily open should support price high, right? So when it does, this C2 candle, right? This is an Asia reversal. This can form the, a little like reaccumulation to continue from, right? Basically, this is like a New York continuation away from the swing point, essentially, right? So hopefully that kind of made sense there. We're also within that new week opening gap. So if I show you here. Right, so that's added confluence really. But yeah, that's just a Asia reversal example I wanted to show you guys. So now let's get into a 10 a.m. reversal profile. So again, Monday being one-sided again. Why? This is actually back-to-back Mondays being one-sided. I'm telling you, Mondays are very one-sided, honestly. So here's the previous week expanding into a low. So what does it make sense for Monday to trade back into the range? Because this week actually continued from the previous range. So here's the previous week's range. It continued from it. But even if we're going to continue, early on in the week, we're going to open high first. You know what I'm saying? And if we're going, this Monday here, same shit. Like if we're going to reverse, we would reverse early on in the week. So even this day right here, it's like, even if we're going to continue like lower, either way, it's like we're going higher first. Like that's ideally what's going to happen majority of the time. So you can trade Mondays. It's actually bullshit. You can't trade Mondays. But anyways, Tuesday, we create SMT with Monday's high here. So you can trade, it's also SMT fill. SMT fill is simply basically just gap SMT, right? Where one asset trades into a gap, other one doesn't. That's simply what it is. Pretty simple. But how can we anticipate this being a reversal day? Is the candle profile. So what does the day do? It opens high first. This is also a good example of a 10 a.m. reversal that is actually like tradable really, because here you're seeing 930 is making its way towards the draw on liquidity, and that's fine, right? Doesn't mean that it didn't reverse or anything like that. It's just they didn't hit the key level yet. It's just trading towards it, right? So this is when 10 a.m. trades and hits the key level, right? Which is absolutely fine. So here you see the high of this 10 a.m. candle is formed from what? A 1 hour swing formation or 30-minute swing formation, whatever you want to use. Does it support expansion? Yes. So 10 a.m. hit the key level, right? Created the SMT. Does it support expansion? Yes. So then you can trade into these lows, right? See the daily open high first. Look at all these failure swings here, right? What do you have here? A gap from the previous day's range. So really this can be ordered pairing ranges, however you view it, because this is an external range high. These are a bunch of external ranges lows. Also a fair value gap below those lows. So whatever you view it, right? It's simply just a 1 hour or above key level, right? You have SMT there. We have the profile supporting it, and we're aligning expansion candles away from it. So moving on. Now I got one Forex. I got I think 2 Forex samples here. So with this previous week here, trading into this gap, we can expect this next week to do trade into these lows. If you fail to manipulate these lows, where can you head to? This low, simply, right? So at this point, Monday, if we're gonna open up the week here and we're this close to this low, I mean Monday can expand. Like this is when Mondays can expand, etc. Like Mondays are very tradable, like I said. So Monday's opening very close to these lows, so it makes no sense to trade higher. Like this is when Monday can definitely expand, right? So that's what it does. And Tuesday closes, right? This is a fair to manipulate this low. Obviously, this is not manipulation at this point. We're trading way beyond it. So if this is going to be high of the week, Monday, this gap needs to hold, right? So when this Wednesday candle has an SMT between Tuesday and Wednesday's high and gap SMT as well, right? That is confirming that we can continue, right? Does the daily candle support expansion? Yes. Now we're going to confirm the high of the day from a 4-hour swing point. In this case, you're trading a candle 2 reversal into expansion. Why? Because within that gap, we have this, basically this 4-hour swing formation. See this 4-hour swing formation that we are manipulating. And does it support expansion? The answer is yes. The candle does support expansion. So this is basically a London reversal. Or what time is this right now? It's kind of like New York session. It's around 7 o'clock, so it's kind of like a New York reversal actually. And what do we have here, guys? 15-minute CSD. We have that V-shaped signature. Here's another opportunity here, right? So that's an example of that 5 a.m. reversal into expansion, basically, right? So in this case, we're going to trade continuation. So now we're going to mark out EQ of this candle's range. So here's the high, here's the low. Looking for a key level within the lower half of the previous candle's range, right? Simply. So when I go to the 4-hour time frame, okay, cool. I see a fair value gap. So price should form the high of day from this level, ideally, right? So when the daily candle opens high first, that already supports a bearish move. So as you see, this candle here did not reverse. It's Asia session as well. And London session reverses. And we can trade London session. Why? Because it supports expansion, right? It has that small wick. So we can reverse and expand, right? We can also trade the 5 a.m. candle because the previous candle reversed. We have open objectives here. And obviously our higher time from draw liquidity that could have potentially got hit the same day, right? So here you're seeing that we have that 15-minute CSD. We have a fair value gap that you could maybe enter off of, right? Whatever you like to use. Here's the opening price of that 4-hour candle. It's right here. You see it opens high first, expands lower. At this point, it's like if this is going to be the high of the 4-hour candle, this gap has to hold, right? So that can be an entry as the 4-hour candle already supports expansion. It's already starting to trade away from the high, eliminating the possibility to become a bullish expansion candle, right? And that's something we will talk about later on in another video about profiling in general, right? You can profile any candle, and you kind of see that a little bit in the example I've shown you guys. You can figure it out. I've already shown a couple examples of it, a couple different ways. So here, as you see, the 4-hour candle is opening up within a level that we want to hold, right? We can do that same logic, really. I can look back within this previous candle's range. I want this candle's high to be formed in the lower half to support expansion. I don't want it to be up here because that wick could be very large, right? So as you see, this candle right here is actually opening up within a fair value gap, right? Or this opposing candle. So it's like it can just rip lower. It doesn't have to create this large wick or anything like that, right? You can already anticipate it being a small wick because you would anticipate this to hold ideally, right? Because we're so close to its lows, there's no point to go higher at that point, right? So in this case, it expands lower. You get a continuation, blah, blah, blah. Those are just some clean examples, right, of just aligning time frames, right? So both days, does the daily support expansion? Yes, yes. Does the weekly support expansion? Yes. So that's an added confluence as well. 4 hour supports expansion here, 4 hour supports expansion, 4 hour supports expansion, 4 hour supports expansion, right? Simple as that, right? So now let's move on into our last example, guys. So here's an example that I also took. Go ahead and move this here. So here's another day that we can anticipate and trade on Monday. Why? Because what did the previous week do essentially? It expanded. So here's the low of the week, expanded into external range high, and we retraced back within the same week. So basically, the previous week retraced into EQ range. So if the previous week retraced and actually put in a reversal, we have an SMT here and a C2 closure, then what can the previous week do, or the next week do? It can expand. And when would we expand if the Friday manipulated? We would expand early on the week, so Monday. That's what we do here, right? Does it support expansion? Yes. Do both of these days support expansion? Yes. For this day, since we have a strong close here on a Monday, and we have this CSD here and this 2-stage SMT, I can expect this neck to expand, right? Ideally. So what do I want to, this day to support? Ideally the previous candle's range, and we can look for a key level, within this here. So going to lower time frame, does the candle profile support expansion, right? The wick size do, we already checked that out. But does the way the candle the way it's forming, does it support expansion? Yes, right? Because they're opening low first, right? There's candle profile, there's two components. It's the wick size, does it support expansion? But it's also the way it forms. So bullish expansion candle opens low first. That's what we have here. London reversal, because we have that C2 candle. You see New York, both New York sessions, 6 a.m. and 10 a.m. continue, right? Do they support expansion? Yes. Small wick? Yes, small wick. So you're aligning expansion candles there. What about over here? Opens low first. Do we have a key level on the 4-hour time frame? No. Do we have a key level over here? Not really. What about 1-hour time frame? All right, we have a gap here. Sure, right? We have a gap here. We also have the drivers expanding away. I actually traded both of these days as well. I only traded this 9 a.m. candle, so you're seeing that the driver is expanding away because the low days put in, right? So the driver should do what? Expand into these lower resistance highs. Also trade this day around the driver as well. You're also seeing that, we can't look back within the previous day over here, we can over here, but not really over here. There's no key level to the left. So that just means that the previous sessions have to create some sort of key level to trade over from, which would be this swing low on the hourly time frame. So again, hourly or above. So here's an hourly swing point we manipulate, and when London actually trades away from it, that just confirms the low of day. So then we're just trading 4-hour expansion candles away from the low of day. So that supports expansion, that supports expansion. The daily candle supports expansion, right? Simply. Also traded this as well. So why did I trade this? Well, a little bit of asset synchronization. You're seeing that this asset failed to manipulate this high. So when that happens, if you see my SMT video, we know that you expect assets to catch up. So this is when the middle asset catches up. When it catches up, this is when we basically reverse. I posted on Twitter, and you're going to see that the other triad creates an SMT here, right? So basically, it's like when SMT breaks. I'm making this video so long, but so when one asset fails to manipulate it, the middle asset then catches up to break that SMT. So as soon as it catches up to break that SMT, you're seeing that the other asset is creating an SMT here. And this is a reversal signature, reversal sequence between triads, right? There's a lot of different sequences between triads. Really one of the most powerful things when looking at triads and understanding market direction. But how can we even trust that? Well, it's the profile, right? So if I show you the profile here, what formed the high of the day? London, C2 closure, but also how does the candle actually form? It has that signature where it opens high first, right? It's a very large wick, as you see, pretty large wick. So what would this also be, guys? External to internal. So we can trade this candle, but understand that it's not going to expand much beyond either the daily open or the objective that's in close proximity to the daily open. So like this swing low, it's not going to expand past it. It's going to have a very hard time to do it. As you see, this probably just consolidates, right? So anyways, guys, going to leave y'all with that. My next video will be on precision swing points. And then I could probably do GxT part 2 because this is kind of just scratching the surface, but you can do a lot with this video. I know this will help a lot of you guys. So let me know what you guys want to see in the future. Let me know if you enjoyed this. And yeah, leave a like, subscribe. And yeah, thanks for being patient, guys. I try to do these when I can, but show love and it'll definitely encourage me to do more of these, guys. But yeah, I'll catch y'all later, man, and y'all have a good one and good luck trading.